Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. Last video I have explained you in detail regarding the meaning of GST, origin of GST, benefits of GST, debit note, credit note under GST, and lastly what is the mode of payment of GST. All these things I have already explained in the last video. In this video I am going to explain you two more topics on GST, that is taxes subsumed under GST and ITC, input tax credit. These two topics I'm going to explain you in detail, so watch the video till the end to get the complete command. So before starting this, just will recap. GST is an indirect tax. It is a tax on goods and services which are consumed. So earlier, so many indirect taxes were there. All the taxes are merged together and only single indirect tax is applied presently in India. That is GST. And there are many benefits of GST I have already explained in the last video. So before starting this topic, take a screenshot of the points which I have written, then I'll explain all the points in detail. Now, the first topic I am going to discuss now is taxes subsumed under GST. In examination, a theory question is asked regarding what do you mean by taxes subsumed under GST? The meaning of the term subsumed is to absorb or to include. That means the main aim of this GST is, instead of so many different types of taxes, so many different rates, so many different provisions, exemptions. So the tax system was very much complicated earlier. To simplify the tax procedure, the government has clubbed all other taxes into a single tax called GST. So this topic, taxes subsumed under GST, means what are the taxes which are included in GST. Earlier those taxes were separate, now it is clubbed together. So subsumed means to include or to absorb a number of taxes. So subsume means to include or to absorb. The idea of GST was to have one tax instead of many taxes. I already told you. The main aim why this GST is applied is the government wants only one tax instead of so many taxes. That is the main ambition. Now thus, when government levies GST, it aims to collect all taxes it was earlier collecting under various names. Under different names like sales tax, excise duty, or service tax, a number of different types of taxes were there earlier. Now the government has combined together. Now hence we say GST subsumes all other taxes. Simply we can say that GST subsumes all other taxes or includes all other taxes. Once GST is levied, the taxes subsumed by GST need not be levied, because service tax, sales tax, excise duty, all these taxes are included in GST. That means no separate tax will be applied for other taxes because GST includes everything. In simple terms, GST will replace the taxes subsumed by it. The GST is replacing all the other taxes. Now the dual GST. In India we have dual GST. Dual GST means GST will be collected by the state government and GST will be collected by the central government. That's why we have dual GST, CGST, SGST. CGST stands for Central GST and SGST stands for State GST. That's why we call dual GST, which is implemented in India, will subsume many consumption taxes. Why it is called consumption taxes? Because this GST will be applied on the consumption of goods and services. That's why it is called consumption taxes. Now the objective is to remove all those taxes that are currently levied on the sale of goods and services by either central or the state government. The main objective of this GST is to have only one tax, which should include all the different taxes which are levied earlier by the central government or by the state government. This reduces the complexity and removes the effect of cascading effect. The main advantage or purpose of this GST is the cascading effect will be avoided. Cascading effect means tax on tax. Already, that means already tax is paid on the purchase of goods. Again, tax will be paid on the sale of goods. That means on the same goods, two types of taxes are applied. Once on purchases, then again on sales. That means we are putting tax on tax. This is called cascading effect. So by applying this GST, the cascading effect will be removed, and also the tax system will become more and more simple, clearly understandable to the people. Now, taxes levied. Now the following are the taxes which are subsumed. Our topic is taxes subsumed. So what are the taxes which are subsumed in GST? So all the taxes, whether earlier taxes were applied by central government or the taxes applied by the state government. So first of all, taxes levied and collected by central. Central excise duty. Then service tax. Central excise duty was the earlier tax which was applied by the central government. So these are the taxes which are levied and collected by central earlier. And all these taxes are merged in GST. So what are the earlier taxes? Central excise duty, service tax, additional duties of customs, special additional duty of customs, duty of excise, additional duties of excise, central surcharges and cesses so far as they relate to supply of goods and services. So these are few examples of earlier taxes, and these taxes are subsumed in GST. And these are the example of those taxes which are applied by the central government. Now, which are the taxes which are subsumed in GST, which were earlier imposed by the state government? Now, taxes levied and collected by state government. State VAT, central sales tax, luxury tax, taxes on lotteries and betting, gambling, entry tax on octroi, purchase tax, tax on advertisement. So these are the few examples of those taxes which are applied, levied and collected by the state government earlier, before this GST comes. So these are few examples. Now, however, there are some taxes that are not subsumed into GST. That means you should remember that all the taxes are not subsumed. Still, there are some taxes which are not subsumed in GST, and it is separately taxed, levied. So what are the taxes? Customs duty, stamp duty, vehicle tax, excise on liquor, tax on sale and consumption of electricity. So these are the taxes which are not subsumed under GST. Still, it is separately taxed. Examples are custom duty, stamp duty, vehicle tax, etc. So what I have explained so far, what is the meaning of the taxes subsumed in GST, and what are the examples of those taxes which are earlier taxed by central and which are earlier taxed by state, and all these taxes are subsumed in GST. And few taxes are there which are not subsumed in GST, and the list is this one. That's all. So this is the end of the topic, taxes subsumed under GST. Now I am going to explain you about input tax credit mechanism. Input tax credit mechanism. Simple words, we can say ITC. Input tax credit. Again, in examination, you may be asked a question regarding explain about the input tax credit mechanism. So listen the lecture carefully now. ITC is considered as the backbone of GST. This input tax credit is considered as the backbone of the GST. It's the main factor of the GST. What is this input tax credit? Now see here. Input tax credit means adjusting the taxes paid on inputs against taxes payable on outward sale. With the help of an example, I try to explain you the concept. That means the taxes which are already paid for the input, the taxes which are already paid for the input will be deducted from the taxes which are payable on the output. That means the taxes of input will be deducted from the taxes payable on the output. So every stage we have to pay the tax for the value added. So simply GST is a value added tax. Whatever value you are adding to the output, on that value added tax is applied. Value added tax is applied. So in this way, the cascading effect will be removed. So example, simple example I'll give. Suppose a sugar producing company. The main raw material for sugar is the sugar cane. So the owner, the person, he has purchased sugar cane for rupees 1 lakh. When he purchased the sugar cane for 1 lakh, he has already paid 10% tax. 10% tax he has paid. 10,000 rupees already he has paid the tax on purchasing the sugar cane. After purchasing the sugar cane, he has processed the sugar cane to produce the sugar. Finally, he sold the sugar for, let it be 3 lakh. He has purchased the sugar cane for 1 lakh and already he has paid the tax 10,000. Now sugar he sold for rupees 3 lakh, on which 10% is the tax, GST. So 10% of 3 lakh is 30,000. That means 30,000 he has to pay the tax. But already he has paid the tax on purchasing the input 10,000. At the time of purchasing sugar cane, he has already paid 10,000. That 10,000 is deducted now. 30,000 is the GST on output. 10,000 is the GST on input. So that 10,000 rupees will be deducted. So 30,000 minus 10,000, 20,000 only he has to pay the GST. This is called input tax credit. Whatever input tax already paid, that will be deducted from the GST on output. Now, since GST is value added tax, ITC is very vital for the success of GST. Ultimately, the success of GST depends on this ITC, input tax credit. If we successfully implement clear provision regarding ITC, then the GST will become successful. The people will accept it without any objection, because that's an advantage. Earlier, if ITC was not there, he has to pay the tax on the final output. When GST is applied, he is paying the tax only on value added during the processing in the business. Whatever tax already paid, that will be deducted. Now, the input tax credit can be availed by every registered taxable person on all the inputs. So this ITC is available to every registered taxpayer of GST. So whichever person has registered their business under GST, he is called a registered taxpayer. And every registered taxpayer is eligible to get this ITC on the inputs used in the business. Next, following are the circumstances in which input tax credit is allowed under GST. Now, GST has given the provisions when ITC can be availed by the taxpayer. Conditions are given. If these conditions are fulfilled, then only this benefit of ITC, input tax credit, will be allowed. What are the conditions? The first condition is only registered person who is liable to claim the benefits of ITC of GST. Only registered taxpayer. That means every person who is paying the tax under GST is not a registered one. Only those people who are registered under GST, and they can be able to get the benefit of ITC, input tax credit. Secondly, ITC is allowed only on the part of goods and services used in the business. Second provision given by the Act, GST Act is, this ITC will be allowed only for those goods and services which are used in the business. In the business only, whatever input we have purchased, on that input if any tax is paid, then only it will be deducted. That means the condition, the input should be used in the business for producing the goods or for providing the services. Then it is not allowed for personal use of goods and services. If a person is using the goods or services for his personal use, not for the business, then ITC is not allowed. It is allowed only for the business, not for personal. Next one, IT is not allowed on goods and services used for exempted supplies. The GST Act has given some exempted supplies. Exempted supplies means those items on which the tax is not levied. So if the exempted supplies are there, on that ITC will not be applied. Input tax rate not applied. To claim ITC, GST returns should have been submitted by the supplier. If a person wants to get the benefit of this ITC, first of all, the person should submit the returns. A number of returns are there. All these returns must be promptly submitted to the GST, then only ITC will be allowed. If returns are pending, then ITC provision will not be applicable. Then ITC can be claimed only within the timeline for entitlement of credit against the production invoice, particular invoice. So ITC can be claimed within the time frame. The GST Act has given a time frame when you have to submit the returns and when you can be able to get the ITC benefit. That means ITC benefit can be availed only in the specified time allowed by the GST Act. So these are the conditions to be fulfilled, then only ITC, input tax credit benefit, will be allowed to the taxpayer. So in this video, I have explained you two topics. The first topic is regarding the taxes subsumed in GST and ITC, input tax credit mechanism. So these two topics are very important from examination point of view. Inshallah, we'll continue the next topic in the next video.